So let's just dive right into it. And as Shelby mentioned, this is a small group. We only invited clients that we're working with and some few others. So feel free to unmute yourselves and ask questions as we kind of get into the model. So why a model? Well, I'm an economist. I have to think in numbers. So for me, when I am running demand gen campaigns and when I was running demand gen at several tech companies, it just was necessary for me to get on the same page with finance and sales and the CEO to make sure that we're talking about the same things, that we can make sure we're all in alignment in terms of what marketing is supposed to be doing versus sales. So what we'll go through is that model, and there'll be a link to it in the chat, how you can use this at your company to get to a lead gen plan. We'll talk through how your funnel metrics may have changed. So that might be revenue targets. Maybe you've already gotten wind from the exec team that your revenue targets are changing, either in total, like you're bringing them down generally across the board, or maybe there are specific regions or segments or products, or maybe you're switching from a focus on new business to existing business, or maybe a bunch of different changes to what your revenue targets look like for 2020. Lead production. So depending on how things have gone in Q1 and Q2, you might be working in a deficit that you need to make up, or you might have certain channels and programs that you need to replace or improve. Conversion rates, we've definitely seen kind of lower MQL to SQL rates, as well as SQL to closed won rates. I think mainly for this one, it's, people that are still the right company and want to do business with you may be on a spending freeze, and so are not moving forward with any new contracts. That's definitely something we're seeing. As well as sales cycle in terms of like just the length of time and then between certain stages, just your ability to move things through the funnel. And then capacity. Obviously, everybody has a different situation. And so we're working from home, or maybe taking care of kids or parents. And we may or may not be online 100% of the time. There also have been, as everybody knows, significant layoffs. So you may just be working with fewer people across marketing, BDR, and sales. So that definitely limits our ability to execute on the programs that we originally planned on. And then of course, budget. So you may have lost budget already, you might have more budget, but budget may have changed. So let's get into how to create a demand gen model and how we can drive our assumptions. Let me just pull it up here. And this is what you guys will have access to. This is a spreadsheet that I've created over the years to just help me go from we need to generate $30 million in business to how many leads do I need from email in Q1. And so we've specifically tailored this for your kind of midway through Q2. So you're kind of going to have an estimate for what's going to happen in Q2, and then you're really forecasting what do I need to do in Q3 and Q4 to generate enough business. So that's what the template looks like, just to make it easier for you in this exact situation. But of course you can use it at any time as you're planning for Q3 and Q4 and beyond into 2021. So there's 5 tabs here. The first one is just the instructions. I won't read all of this, but it kind of shows you some notes, how the model works, some kind of intricacies to help you use the template. The first thing you'll want to do is just determine what regions and segments that you want to use in your model. I'll show you an example. So there's these 4 other tabs here, this opportunity model for new business, existing business, total, and then your lead gen plan. Within the new, existing, and total, you'll see these summary of results sections, an assumptions section, and then, number of opportunities, raw sales from opportunities, and distribution of sales to account for sales cycle. And what this does is it basically calculates from I have a revenue goal of 600K, for instance, and then based on these assumptions, I know I need to generate X number of opportunities. So these would be my Q2 targets for opportunities, Q3 target for opportunities, Q4. These are all dummy numbers just for the purposes of this demo. And then we do this for new business, existing business. Why do we separate them out? Because they might have different assumptions. We might have different targets for them. Marketing may not be responsible for generating new business or existing business. And then the total tab kind of walks through everything. And then where we'll ultimately end up is in this lead gen plan. So if you're glazing over because there's so many numbers, stick with it. We'll kind of break this all down into detail, but I just kind of wanted to fly by for a second here to give you just kind of a brief overview of what we're going to be doing. And so back in the instructions, this kind of tells you like where to get started and how to actually use this for your team. And so, as I mentioned, the first thing you'll want to do is determine how you want to model. So you might have different regions like North America or Europe. You might work in Asia Pac. And so what are those regions? I'm sure you have this already in your plans or in your reports. And then you may also have products or segments. So as a placeholder, we have used US dash, and then we have product A, B, and C, and then Europe, product A, B, and C. But you should customize these to whatever you want to use. And then if you aren't going to use something, just make sure to zero out any assumptions, and then you can just either hide or delete these tabs, these rows. We've also have a couple of other placeholders, like if you have more than 6, for instance, you can use these rows as well. But for now, I've just hid them for simplicity. So the first thing you'll do is you'll just update. So maybe my product A name is, let's just say I have a product called Marketo. And I am going to then set targets and assumptions for my Marketo business. Once you kind of update these, so let me just do that. I will do Marketo, 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 oops. And my total. I'm just doing this so that you have an idea of how you'll actually use this. Once I've gone through and identified the segments that you want to model for, then as you say here, I'm just updating the column A and hiding any different rows that you don't need. And then in terms of your lead gen plan, we also have leads and opportunity targets separated out there. So what I'm going to do is I'm just going to do US Marketo right here. And that will show me how many leads I need to generate for that segment. So once you've gone through that, I just want to call your attention to the cell formatting. So what we've tried to do is anything in white is kind of it's kind of very specific to your business. It's like, what regions are you caring about? What are your product names? Do you call it renewals or expansions? Do you call it existing versus expansion? Do you call it new business? Things like that. That is just kind of nomenclature for you to fill out. Those are all in white. All of the quantitative assumptions, so like the actual inputs that are going to drive the model, are in orange. And then the summary metrics or the calculated metrics are highlighted in blue. And then things where we have multiple calculated metrics, we'll do like the summary level at light blue and then the total in dark blue. So this is just to help you, oops, oh, here I am. Okay, this is just to help you kind of read it. Anything in blue is obviously calculated, so don't edit it. Otherwise, you're going to break some formulas. This is open. You may want to consider locking those cells once you've done it, but we didn't want to just make you crazy with out the ability to edit things. So it's open for you. And then throughout the model, I've added comments to define the different metrics. So for instance, in right here, you'll just see them as little flags in each of the cells. And then just a note, this is a quarterly plan, not a monthly plan. If you do have monthly plans, you'll need to make some edits. Feel free, happy to help you, but you'll need to edit kind of like the sales cycle and how the leads and opportunities are calculated. But for all of those that want to do quarterly, this should be good for you. Okay, so now let's kind of dive into how we utilize this. So that I'm on an opportunity model new business plan. And what I'm looking at here is the summary of results. And the first thing I want to do is set my targets for the revenue. So I might decide that I need to make, and these are in thousands, you'll see that in the comments, but I might decide that I want to make $1 million off of selling Marketo. Maybe I want to sell nothing for the others. I'm just going to go ahead and hide that for now. Actually, I'll leave it open just so that you can see it. Okay, so what this says is my revenue target is $1 million for Marketo. Based on this model, it is projecting that I will close 1.14 million in opportunities in 2020. Those opportunities may have been created in 2019, but also 2020, but they will close in 2020. The opportunities created based on this model are 363. And then the total value of 2020 opportunities, this is the total value of opportunities created in 2020 that may close one at some point in the future. This is just kind of the total value that you're creating. And then in the cushion, you'll just see, am I making it or am I not? So here you can see, for instance, we're 114% of target, so yay. Basically, we're playing with all of these numbers to get to achievement on your revenue plan. And then the assumptions, I have placeholders here, but this is just for illustrative purposes. You'll obviously want to customize this to your business. The opportunity growth rate is just how big is your slope from Q1 to Q4 in terms of, do you want Q4 to be much more aggressive than Q1? Or do you want it to be kind of a steady incline? And so I've seen anywhere from like, I mean, really across the board, from like 10 to 100%. Anything beyond that, I think, is a little bit insane, because just think about it. If your company is growing, say, 60% year over year, it is obviously not attainable that you would do anything more than that on a quarterly basis. But this is your growth rate across the quarters in terms of opportunities. This is your average selling price. So just what it is. I've seen companies do a first year value if you're software, or a total contract value. It just depends on your business, however you kind of model and think about your revenue. And then in terms of growth rate, do you expect this average selling price to grow over time or not? You may not, and then you can just leave it at 0%. Win rate, so this is your current win rate in terms of opportunity to closed one. You can have a growth rate for win rate. I added this just for consistency, but I would caution against using any sort of positive growth rate for win rate, especially right now, just because I think that's pretty bullish to expect that we're going to be better at closing deals between now and December. But if you wanted to assume that, you could. And then the sales cycle, I've broken it down into quarters. Sorry, those are my kids. Okay, real talk, guys. Okay, so, and then your sales cycle is just broken out by quarters. So all of these should add up to 100%. So I'm expecting in this example, 55% of my opportunities to close in 0 to 3 months, 21% of them to close within 4 to 6 months, 14%, 7 to 9 months, and so I've also added a column here for value of opportunity. This is a good just sanity check as you are running reports on your marketing campaigns or trying to determine, if we spent, $10,000 and we got 100 leads, is that good enough? This is a good sanity check to show you, like, this is the value of an opportunity to your business. Therefore, it's not really a good idea to spend more than this to generate an opportunity, because if I spend, say, $3,000 to generate an opportunity, my expected revenue of that opportunity is only $2,800. And so I would actually be losing money. So it's just, again, just a nice sanity check for you to start to play with your assumptions around your marketing campaigns. Number of opportunities is where you actually get into how many opportunities have you created thus far. So you'll kind of enter in how many you've created in last year and then first quarter of this year, and then a projection of what you will create in Q2. The model will calculate Q3 and Q4 as well as the quarterly numbers for 2021 based on that growth rate, and then you can see the annual summary right here. Another sanity check that I've added is just related to capacity. So for instance, if you are, you create your opportunity assumptions and you think you need to generate, 360 opportunities and you only have 4 sales reps, that means that each rep each week needs to create, on average 1.7. So, two-ish opportunities a week. And so that may not be realistic for your business. Because again, this is just related to this product. They might be, if it's all of these same people, then on average, they need to be creating 5.4 opportunities per week or 65 or 64 opportunities per quarter. So again, just a sanity check around, are your opportunity numbers realistic? Usually how this goes, so let me just kind of take a pause. Usually how this goes is you're entering in your assumptions and your targets. You will get some kind of crazy opportunity numbers that you need to generate to hit the number. And that's when you need to go back to your exec team and to your counterparts in sales and finance and say, okay, if we want to get to these revenue numbers and if we need to hit these opportunity targets, this is what needs to change. And so then you can just have an open dialogue about, what all of these assumptions are and say that, as they all know, it's a numbers game. And so it shouldn't have to be all on marketing's shoulders to kind of deal with some potentially poor assumptions. So it's, again, just a tool to have a conversation. I'm not going to go into too much detail on this, but I just want to make you aware of how this math is calculated. So raw sales from opportunities, this is of opportunities created in that time period. What is the future value of those opportunities? So these opportunities may or may not close in Q1. They may close in the future, but Q1 has generated $259,000 worth of value for the company, worth of expected revenue. And then distribution of sales cycle, this just shows like I'm expecting to book $240,000 for this product in Q1. I'm expecting to book $328,000. And so then this is my total, 1.14, and you can see that that matches to my total closed in 2020. So that's kind of how it works. And so this is for new business, and then we'll repeat the whole exercise for existing business. The only difference for existing business is that there is this renewals line item, which is intentionally simplistic, but what it's trying to do is just separate out between expansion deals from existing clients, that's up here, to renewals of it's the same product for the same client. They're up for renewal, we're selling them the exact same thing, as opposed to I'm selling them something new, but they are already a customer. The reason why we want to do this is because usually finance gives us this number of, you know, here's the people up for renewal, here's our renewal rate, or they have an expectation in terms of we're expecting X million dollars worth of renewals to come in. And then that leaves you free to do your assumptions in terms of the average selling price and your win rate and your sales cycle for expansion opportunities separately. So that's the only difference here. Otherwise, everything is the exact same. You'll still put in all of your assumptions in this table here, as well as your opportunity production for 2019 and 2020. That will then calculate, of course, your total closed and then your cushion. So in the previous tab, we were like wildly hitting all of our numbers. In the existing, I'll show you, this is where we're hitting it. So let's see. This is where we're not hitting it. So you can see we're $74 short. Okay. And then the total plan is just putting them all together so that we can see the new business target versus our existing business target and how we did. So that we can see this is the total target, this is what we closed across new and existing, and we add in our renewals, and we get our total closed number right here. So we hit 7.5 million out of a 55.2 million target. And then we've also just calculated the year-over-year growth. That's it. So that's kind of how it works. The point of this is to generate your opportunity targets, which are these. In your case, where we are right now, we are kind of projecting based on where we are at, and we're almost exactly midway the quarter, where we're going to end up for Q2. And then we're going to project what we think we need to generate in Q3 and Q4 to hit whatever revenue targets we have. Once we have our revenue targets, let's just use Q2 as an example. Then what we want to do is go over to our lead gen plan and then actually start to lay out what campaigns are we going to run to hit that target. And so what this is, and I'm just gonna like collapse this a little bit for simplicity right now. What we're going to do is start to lay out our campaigns. So I've organized them by channel slash just kind of summary buckets. So you might be doing some telemarketing. You might have an internal BDR team. You might work with outsourced folks. But any sort of outbound prospecting, not sales generated, you can put here. Online advertising. You might split this out into online versus social advertising, but this is kind of where it goes in terms of your Google, your LinkedIn, your organic search. This is all here. Email, of course, you have different campaigns that you're running. You may also have an ongoing nurture stream where it's not like a specific campaign, but you have some automated nurture going on behind the scenes. Events, of course, in person or virtual these days. You'll enter in your events. And then any third-party programs, for instance, content syndication, you might be doing some campaigns with partners. You might be doing some other programs where you're kind of getting lists of leads that you're then processing and syncing over to the sales team. So these are just placeholders. You can fill in your own campaigns. And maybe sales generated. So of course, marketing doesn't have to do all of the work in terms of generating leads and pipeline. You should be expecting leads and opportunities to be generated from the sales team. You may also have, split out like partners or channel separately as a category, but you can kind of decide how to organize this. And then inbound I have separately. Others you may have kind of web, and organic search kind of bucketed together. I have inbound web as like kind of direct traffic. either way, however you organize it, you want to keep track of both inbound web and then also inbound calls and emails. And then how this works is for each of your segments, so we've got our regions up here, we've got our products down here, we're going to just make some assumptions in terms of how many leads we think we can generate from each activity. So let's say I can generate, I'm really going to spend a lot of money in LinkedIn, I'm going to generate 250 leads this quarter. That will then calculate, based on my conversion rate, how many opportunities I should expect to generate from that program. And then I can also enter in my budget, and then we will calculate the cost per op and the cost per lead. And again, you can compare the cost per opportunity numbers to the value of opportunity numbers that you have on tabs 2, 3, and 4 to just kind of sanity check, you know, how does that compare? Are you expecting a positive ROI in terms of the overall contribution to the business? All of the totals are calculated for you. As I mentioned, in the blue columns are calculated. So anything in blue is calculated for you. And then the new business target is populating from the previous tabs. So we're bringing in the new business and pulling this into Q2. Actually, maybe Shelby, we can kind of split this out into Q2, Q3, and Q4 for everybody, just so that it's kind of clear, and then you can use this for the remaining quarters in the year too.
Yeah.
But this is just targeting new business because that's more typical, that marketing is generating new business opportunities versus existing business. But if you are generating existing, then you can certainly make some edits there. And then just as a best practice, planning to overachieve, because some things are not going to go according to plan, and we want to have a little bit of a buffer to hit our numbers if, you know, certain things don't go as we expected. So we're planning to hit 110% of the target. And then what we're doing here is we're just calculating, you know, are we hitting it or not? So I've intentionally left these blanks so that you can just kind of see, here we are hitting our number, here we are not hitting our number. And so we need to kind of go back to the drawing board and figure out, you know, what we can do to get these people back into shape. And then at an overall level, you can see kind of where you're short. Same thing for opportunities. And then what I hid earlier was the conversion rates. And so what I've done is I've made this a little bit more complicated because I wanted to give the flexibility. You may or may not need this. You'll see in this example, I'm using the same conversion rate across all different regions and products, but that may or may not be the case for you. So I just allowed it so that you could have different ones if you wanted. But what this is doing is now you're inputting some assumptions around what percentage of leads do I expect to convert into opportunities. And so I've put in some kind of baseline metrics based on the actual channel or program here. So for instance, email would be at a much lower rate than, say, inbound web leads or inbound calls and emails or rep prospecting even. But this will be definitely based on your business. If you don't have those reports, I would work with the sales team to at least go back in terms of the leads that have been converted into contacts as a baseline, and also evaluate the opportunities that were created and try and analyze their lead source to identify which channels and campaigns were your best performers in terms of generating pipeline. So you can see the average conversion rates across these different channels and across the different audiences for the specific program. But basically, this is your way to come up with a lead gen plan bottoms up that then you reference and kind of validate that you're actually hitting your target. So again, this is pretty quantitative, but if you do nothing else, you already have targets potentially. You can just start here. If you don't even want to be doing any modeling whatsoever, and let's say maybe nothing has really changed for you, you already have this spreadsheet, you don't need to recalculate your targets in this format, you already have your targets, you can just enter them in here and then use this as a way to kind of plot out the buckets and the specific campaigns that you're going to run to make sure that you have enough in plan. And that just kind of brings us back to, oops, where did I put that? To our presentation here. And actually, maybe let me just pause and see if there's any questions in terms of the model and how you might use it before I kind of go into some high-level recommendations. Anybody? Okay. Yeah, I think this will definitely come to life as you are working in your own assumptions and are playing with the numbers to make sure you are confident in your own plans. And I would say that if one person can take the lead on it, that's ideal, that's best. And then you can work with the others to make sure that you have things in place. Qualitatively, you know, we can have all of the targets, all of the calculations that, you know, we desire. But I think especially right now when people are a bit harried, we're maybe not even ready to deal in real numbers yet. One framework that we just used for our own selves, we just had our QBR like a month late, but we had a QBR for ourselves. And one of the best frameworks that we've used over the years is just the stop, start, continue. And this is a good exercise for you to do within your marketing team. Might also be good to get sales input as well for just what's working, like what's going great that we should continue. For example, like one of the things that came out for us right now is we do this daily stand-up for like 15 minutes at 9:30. It's a time that all of us can get together. We're all working from home, but mornings seem to be better with people with kids. And it's just 15 minutes that we're all kind of dialed in and focusing on what are the priorities for the day, what do we need from each other. It's just a nice checkpoint. You might have other things that like campaigns are really working, or maybe you are aware of something that somebody else in the team has been doing that you want to leverage across a different business line. That's something that you can kind of work into this framework. Starting is, you know, anything new, like either ideas or processes or practices that you think would be beneficial to improve how your marketing team is operating, and also the specific campaigns that you want to run. And then stop, of course, is just trying to declutter, and not continue to focus on things that really aren't working, and continue investing in them, and just stop. And especially for right now, when we have limited attention spans, our prospects have limited attention. I think it's super important to be not stretching ourselves too thin, and focusing on specific channels and programs that are really going to be impactful. Yeah. So I would definitely recommend doing this. I like to send this slide, like just kind of use this slide to your team, have them do a little solo brainstorm, and then come together and talk through everybody's answers. But I think you will find, you know, stuff that's been kind of on people's minds, but they haven't necessarily formalized it into feedback or a campaign yet, that you can then get everybody together and make some decisions on.
Yeah. Yeah, one thing I loved about this exercise is because everyone did it and then presented, you saw these through lines that we were all thinking the same things, but had never communicated that before. And it's also an interesting place for people to bubble up experiments or a lesson they learned from an A/B test, something that wouldn't get prime time normally, but they have this insight that suddenly seems important. And there's just barely, it seems, a forum for that otherwise.
Yeah, definitely. And if you haven't had your QBR yet, or you just haven't really had a Q1 debrief, now's a great time. People are a little bit more sane. And this is a good checkpoint to just kind of get everybody together, aligned, and a little bit more focused on how to move forward. If you only remember one thing from this webinar, I guess the point is, like, the best thing you can do for your team is to get organized. As a marketing leader, you kind of set the tone for how your team is operating and whether they are overwhelmed or kind of sticking with it. And the best way to help people be motivated and focused is to have a plan. Plans are reassuring, they're goalposts, they're not so insane. Even taking down numbers or increasing numbers in certain areas will just give people visibility into what is real. I think a lot of us as marketers are not really sure if plans have changed, and so we're keep it on, but that may or may not be the right thing for your business. So get organized, help your team get organized, and reevaluate what we're actually doing so that you can get a plan that you feel confident in. Whatever your marketing plan looks like, whether it's a spreadsheet like this, whether it's a PowerPoint, whether it's just a sheet of paper where you have a bunch of ideas, we just want to make sure that it's realistic and clear. Realistic, we want to make sure that we're being empathetic to what is actually going on in the market and, you know, is based in some sort of reality of right now. And clear meaning there's owners, like people are clear on what they need to be doing to make this happen. And I think just in terms of encouragement, like, I think we can go ahead and plan now. I think there's still time in Q2 to kind of adapt and make changes. And then we will continue to learn as things change and we can keep going. So that's the content we wanted to share with you all. Really appreciate, I've seen some of the comments here. I tried to answer some of these questions along the way. But I want to thank you for participating in this workshop. We're actually going to be doing several of these. So if there are certain topics that you would find interesting, we have a bunch on the list. We have like lead scoring and campaign attribution. I don't know, Shelby, there's probably like 8 or 9 that we have on our list.
If you actually go to the next slide, we put in a ton of ideas of just some of the stuff we want to talk about. So if any of these pique your interest, let us know. And of course, you can reach us on LinkedIn, and our emails are simple. It's Jessica@Sponge or Shelby@Sponge.io. And yeah, thank you guys. Time is so precious right now. We really appreciate you joining us.
Awesome. All right, well, we're going to go ahead and share the slides, and I'm going to make a quick update to the spreadsheet so that you can have a Q2, Q3, and Q4 version with the calculated targets in them. We'll share the slides and that updated spreadsheet via email, and then let us know. We'd love to hear how it's working for you guys and what changes or updates you guys are making to your plans and how it's all working for you. All right, thank you very much. Talk to you guys soon.
Bye.